Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is James Corbett, publisher of the CorbettReport.com and editorial writer for the International Forecaster. He's speaking to us from Japan, where he has worked and lived since 2004. Welcome back to the show, James.
Pleasure to be back. Thanks for having me on, as always.
Is the Japanese Prime Minister proposing another round of public works to keep the Japanese economy moving along?
Indeed, that seems to be the, I want to say annual, perhaps monthly, refrain here in Japan these days. We'll just have more government spending to paper things over in the Japanese economy. So public spending of various sorts has been proposed throughout the entire term of Abe over the past several years. And yes, we're getting another round of calls for public works spending programs to lift the economy yet again. What could go wrong? Well, I'll tell you one thing that I don't know if it's going wrong. I suppose it's going according to plan, but is ominous nonetheless. An interesting moment has just occurred in Japan. On November 10th, the Bank of Japan's balance sheet, so the total assets on the books of the Bank of Japan, the central bank here, just surpassed the GDP of the country. 552.8 trillion yen on the books of the Bank of Japan. That is more than the Japanese GDP. So just to put that into perspective, the European Central Bank assets to GDP ratio is about 40%. The US is at about 20%. Japan is 100%, which I think puts the scale of the problem involved here into perspective. So they can try a new public works spending program and inject some more money into the economy the good old-fashioned way of just basically putting more government money on the line. But I think the fact that the Bank of Japan has been holding this up and is outright buying bonds and outright buying ETFs that play into the Japanese stock markets to keep this bubble afloat is a pretty ominous sign, because I don't know of any way to bring that bubble down that doesn't involve some sort of miracle. And it's not going to be a happy landing when it comes.
How dangerous is it for our companies or our country's central bank to put all of its eggs into one basket?
It's not even, that's bad enough, but it's putting it into its own basket in a sense. I mean, here it is, the central bank of the country is underlying the Japanese stock market, is underwriting the Japanese bonds, the government bonds at this point. I mean, it's craziness, because of course it is all resting on the good faith and credit of the Bank of Japan. But as soon as that is undermined, as soon as there is a delinking and deleveraging of what's going on here, the entire house of cards collapses. I don't think a lot of people in the public have a good sense of just how precarious this is, because it looks stable. Well, okay, they're doing it, so why don't they just continue doing it? And that's the kind of mindset that I'm sure a lot of people look at this with. But the slightest upsetting of that apple cart, the slightest bump in that on that road, and the entire thing spills over, and the entire economy is, as I say, is being propped up by this at this point. That's a precarious situation that I'm sure does weigh heavily on the minds of the people of the Bank of Japan. We covered it several months back, where the Bank of Japan was having a mini internal revolt, where they were talking about maybe we should start cutting back on stimulus and maybe we got to start tightening, but we can't do that. And so they decided not to really ease off on their policies at the moment. But they were admitting at that time, we've kind of painted ourselves into a corner. It's just a question of when everyone will notice that that's happened.
Does the average person there know or care?
I don't get the sense that this is the pressing issue that I think it probably should be, given the scale of the problem involved. It is obviously on the minds of, I think, the Japanese public that the country is in a precarious financial situation, and that's reflected in all sorts of day-to-day and everyday worries about, obviously, workers thinking about wages. And on the bigger scheme, we know, for example, that the government has delayed increasing the consumption tax that they've been planning to raise here for some time because of the precarious state of the economy, but apparently that's going ahead next year as scheduled. So there's little indicators like that, but I think this doesn't really impact the day-to-day lives of most average workers here, at least not at this point, because, again, it all seems to be being propped up, and as long as that is happening, I don't think anyone really minds how it is happening. It's only when the entire thing crashes that people suddenly have a very deep interest in what's been going on, and will discover, I think, the extent to which the Bank of Japan has been propping up this economy.
Does this mean that if there's trouble in Japan, the Bank of Japan can dip into people's personal bank accounts to bail the country out?
That's actually a very good question, because that would rely on the extent to which the Japanese banking system has adopted the rules that have been written over the past decade by the Bank for International Settlements, and more importantly, there was a subgroup, the Stability Defense Board or something along those lines. I can't remember the exact title of that, but it was being led by Mark Carney, of course, the Canadian and former Bank of Canada leader, over the past several years, to develop new rules for banks on how they can bail out banks in the event of crises that would involve bail-ins. As you say, basically, when the banks start to fail, will they take the customers' savings as part of the bail-in of the bank? And there's rules that have been written over the past several years to do with that, and I know that they are being pushed in white papers that are being pushed out by the Bank for International Settlements that are expected to be adopted by all of the members of that BIS, which includes, of course, Japan and Canada and the United States and basically most of the nations on the planet. But I don't know the extent to which that's actually been adopted here in Japan, but I have a feeling we'd find out pretty quickly in the event of major bank panics here.
Are bank accounts in Japan guaranteed up to a certain amount like they are in Canada and the U.S.?
They are indeed. I don't know the specifics of the upper limit of that. I've never brushed against that limit, I'm sure. But yes, there is a system of guarantee. But again, things like that are of course the fig leaf, because ultimately what that will be is the guarantee in the currency of the country. And if the currency itself is affected by a collapse of some sort, then that renders the problem moot. If there's an inflationary event or a, God forbid, hyperinflationary event, then just getting secured in the amount of yen you have in your bank account probably won't make a difference in the event that, the yen is not even worth enough to buy a scrap of bread. Obviously, that's the worst case possible scenario, and I'm not necessarily saying it's going there, but I think that puts the problem into perspective. Just guaranteeing the yen amount is not necessarily the same as guaranteeing the amount of wealth you supposedly have, given the current stability of the currency.
We'll have more with James Corbett right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with James Corbett. James, according to the Chinese government, and we know how accurate their stats can be, China now has a 22% vacancy rate. Does that signal a real estate crisis there?
Yes, it does, and for many reasons that we'll get into in a moment. But you rightly cast aspersion on the Chinese official government statistics, which should not be trusted. But in fact, this statistic does not come from the Chinese government itself. It comes from a team of researchers Specifically, thousands of researchers spread out across 363 Chinese counties last year as part of the China Household Finance Survey, which is run through the university. Which university was it? The Southwestern University of Finance and Economics in Chengdu, in China. So it's not an official government number per se, and this is actually one that has been vetted by a large number of people that discovered, yes, vacancy rates topping up over 22%. I mean, that's incredible. That's an incredible amount of vacancy. It's crisis levels, really. Except, of course, that we all know that the housing economy in China is steered and controlled and managed every bit as much as every other part of the economy in China. And so the reason that this is so particularly precarious in the Chinese case is that when you look at actual real estate assets as a percentage of household wealth, at least for urban Chinese residents, it's upwards of 75%. 3/4 of their household wealth is parked in real estate. And compare that to, say, the United States, where it's about 28%. That puts into perspective just how important the housing bubble, and it is a bubble, that has been deliberately inflated and reflated by the Chinese government over the last several years, is to the overall Chinese economy. And there have been specific cases of reflation of that bubble over the last several years. And then to combat the risk of speculation in housing markets that are being propped up by the government, then the government goes after the speculators and tries to crack down on that. So it's this precarious balance that they've been trying to reach, with enough vacant spaces that there's places for people to move, but not so much that the price goes down, but then you don't want the price to go up too much, and it becomes this unsolvable puzzle. And here we are again at this extremely precarious state, with now the latest figure coming out over 20% vacancy. It's crazy. And it's obviously, again, not a sustainable situation, and one that you can only ask, where does this end? And once again, I can't think of anything barring a miracle that will make this end nicely for the Chinese economy.
Is it true the Chinese government will guarantee the value of your property, or is that a myth?
I don't know of any specific guarantee. It might exist, but I don't know of a specific guarantee in that sense. But I do know that ultimately the Chinese government has been acting to prop up the housing markets by all sorts of means, and that includes the building of vast ghost cities, which presumably, one imagines, will be used as part of this great mass migration that's going to be taking place in the next several years of all of these people from the Chinese countryside, but also, of course, in basically propping up and making sure that it doesn't fall below a certain level for all, obviously for all of the home buyers and in the Chinese markets, but specifically trying to keep the people, the vast majority who are in the small but growing middle class, or something that could be compared to a middle class that's emerging in China. So you'll see, for example, tier 1 home prices, the top tier, in 2016 reached a bubble where it was going up 30%. That has been completely deflated, and it's down to about 0% growth now. But the lower tiers, tier 2, tier 3, tier 4, have been steadily rising for the last few years, and the Chinese government hasn't been letting it fall. But once the extent of the vacancy problem becomes apparent and people start trying to dump their properties and get out and liquidate, that's going to be the real crisis.
Who owns all those condos in the ghost cities? Are they government owned? Are they speculator owned? Who owns those?
Well, again, I think when you look at the Chinese economy, you can't necessarily say that just because something is private, quote, owned, it is really privately owned, because again, ultimately it comes down to the government and what is allowed to happen, and obviously people playing ball with the Chinese Communist Party are the only people who tend to succeed on a large scale in China. So again, the extent to which ownership, what is said on the deed actually matters. I mean, at the end of the day, ultimately, it's the Chinese government will decide what happens with that housing. But I believe these have been developed as commercial properties that can be speculated on, but again, only within the tight confines of the Chinese Communist Party's rules.
If the economy in China really starts to collapse, will people there who own overseas properties, like in Vancouver, will they sell those overseas properties to prop up what they have at home, or will they keep that money abroad feeling that it's safer there?
Well, I imagine, this revolves on several layers of speculation here, but and again, it depends on what way this type of bubble would pop or would deflate, shall we say. But assuming it would be not a happy economic situation in China, one would imagine that a lot of people who do have assets overseas, specifically real estate overseas, would probably tend to want to hang on to that, because that is probably the whole point of getting that money out of China in the first place and parked into something stable like real estate overseas, is to make sure that you do have that nest egg offshore that can be relied on in times of crisis back home. I think rather than liquidating their overseas assets, they might be more interested in moving into them if possible, and if barring that, at least hanging on to them.
We'll have more with James Corbett right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with James Corbett. James, Prime Minister Justin Trudeau is in Asia talking about free trade agreements with Southeast Asian nations. Does he have a shot there?
Potentially. I think there's a hunger for someone to step into the void that has been created over the past couple of years. Again, we've talked about this before, the sort of upsetting of the TPP apple cart by when Trump actually fulfilled a campaign pledge and pulled the US out of TPP. There is a sort of vacuum, a void that's been created from that, and I think Canada, well, at any rate, is trying to insert itself into that void. And potentially, there are certainly people in Southeast Asia who are interested in forming trade alliances with places like Canada. So I think there's opportunity there. And as we've also talked about before, demographically speaking, Southeast Asia is a place that is looking towards booming in the coming years and decades. Again, if only for demographic reasons, but also because of economic and structural reasons, there is expected to be an upward rising tide. So this might be the best time for Canada to make a deal like that and try to gain the most that they can. Whether or not one thinks Justin Trudeau is going to be the best expert negotiator to get that to happen, I'm not sure, but at any rate, it's probably worth a try.
The IMF's Lagarde says central banks should consider issuing digital currency. Is that the next big move for central banks? Yes, I think it is. Maybe not the next, but it is down the road. It is coming in the pipeline, and I think we can read this writing on the wall. And we've noticed before how the IMF and the World Bank and others are starting to talk more about and even utilize digital currency, specifically central bank owned and controlled and issued digital currencies, which certainly can't be and shouldn't be referred to as cryptocurrencies, because those are very different things. But I noted, and I wrote an editorial last year about, I believe, again, it was the Bank for International Settlements published a white paper on the idea of nationally issued quote-unquote cryptocurrencies or digital currencies, and how that is going to be something that we're going to have to think about more and more in this modern age. Of course, it seems like the inevitable next step. Now, of course, with the idea of digital currency, it comes a lot of problems with regards to, for example, privacy, which I think should be pretty obvious. The type of transactions that you can conduct in cash, person to person, cannot be conducted outside of the purview of the state in digital currencies. And that's going to, I think, probably mean a lot of things. There's no way, obviously, to estimate
the percentage of the economy that runs on transactions that do go outside of the purview of the government, but it's a significant part of any economy. And assuming we move into the digital age, I suppose we'll find out just how much of those transactions are being conducted without the ability of the regulators to tax and transact and database them.
Is that the whole idea, track and tax? Because the European Union has a limit, I think, of 750 euros that you can take out of a banking machine. Anything else has to be digitally transferred. And I didn't pronounce that right.
Yes. Digitally transferred. Yes. I mean, there's all sorts of implications for this. And at the central bank level, they are talking about this, talking about central banks focusing on what they call back-end settlement. And so it would involve, and as Lagarde said in their little press conference here, your payment would be immediate, safe, cheap, and semi-anonymous. Semi-anonymous. You gotta love newspeak, double think words like that. But there is a push that's coming right now, and it will be led by, I'm sure, central banks as a way of rolling it out to the public and getting the public more on board. And we're starting to see test cases of this, like in Sweden and other places where digital cash is becoming, the cashless society is almost upon us. And I think the latest statistic is that only 13% of Swedes have used cash for their most recent purchase in a shop. That's a pretty low figure, and it goes to the extent to which Sweden has become a cashless society in recent years. So we're starting to see the effects of this. And interestingly enough, we're starting to see counter backlash to this, not only from the customers, but even from banks themselves. There was recently a bit of brouhaha in Sweden about a regulator basically saying, well, actually, banks should be regulated to mandate that they have to accept cash, which seems like a pretty basic thing, but it's a contentious issue in a country that's gone so cashless. So we're starting to see this thin edge of the wedge, and I think it's only inevitable. I mean, it's inevitable, but the only question is how long will it take to get us towards that, and how quickly people will part with their cash.
Well, utilities and phone companies in Canada have refused to take cash for years, saying it just costs too much to transfer cash and keep it secure. So if you can't do it electronically or with a card, they really don't want your cash.
Yeah, and it really brings to mind the question of what legal tender really means when businesses can refuse to accept legal tender. But I guess that's for the courts to decide, right?
Also, taking a look at e-commerce in Asia, even if the economy is slowing down, is starting to boom. Are the Japanese starting to use e-commerce more and less cash?
I want to say not really, because I don't experience it and feel it in my day-to-day transactions here. But I suppose there are signs of that, and there are moves towards that. Certainly, there are no ends to the amount and the flavor and the ability and the possibilities of using various cards and electronic payment options in Japan. And there seems to be more all the time. And now, I mean, there's Apple Pay and all of those things that I'm sure you have in Canada are here in Japan as well. But again, I think on a day-to-day transaction level, almost everyone I see in almost every situation is still using cash. So it's certainly available here and perhaps even being pushed a little, but at this point I don't see it in the day-to-day purchases. Now, I have the feeling that could change very quickly if there was a country to go cashless first, it wouldn't necessarily surprise me that it would be Japan, even if Japan is so much a cash-based society at this present moment, because I think Japan is one of those countries that can flip on turn on a dime, if and when they are forced into it or feel pressured into it. And I think that a concerted propaganda push could probably push the Japanese public toward that. But at this point, I don't see that in my day-to-day interactions here. Now, having said that, I think Japan is on the cutting edge of cryptocurrency utilization. Of course, famously last year, Japan started accepting Bitcoin as an actual currency and treating it as such, and can be used as such. And it has been adopted to some extent. You can now order an airport taxi from Tokyo, for example, with Bitcoin and things like this. So there are use cases for it and possibilities for use. But again, it hasn't filtered down, I think, to the average person by making their average day-to-day purchases here.
Are the Japanese big online shoppers?
Yes, and not. I would say Amazon and things that you would know back in Canada are probably not the big ones here. It's Rakuten and companies like that. But yes, online purchases certainly skyrocketing, and as a result, I mean, of course, the delivery services are also being worked ragged and worked to their bone, basically delivering packages all day, every day, all over the country, and that's starting to become an issue here. But I'm sure that will be solved by some enterprising company with their drone technology in the near future. But yes, e-commerce in that sense certainly is alive and well here.
Does Japan have a lot of restrictions on the use of drones?
Very good question. I actually don't know because I don't operate drones myself, but I do know that they are commercially available for sale here in the stores. I've seen them. I just don't operate them myself. So I'm sure there are restrictions, but what specifically those restrictions are and how the Japanese regulators restrict that airspace, I'm not sure on the details. But obviously there must be some rules in place.
James, thank you so much for chatting with us.
I very much appreciate you taking the time to talk to me.
My guest has been James Corbett, publisher of the CorbettReport.com. He was speaking to us from Japan, where he has worked and lived since 2004. If you have any questions for James or any of our other guests, you can send them to info@howstreet.com. You can find us on Twitter @HowStreet. Our popular YouTube channel is Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.